Hello, welcome to McBoss Capital channel. This is week ending May 31st. Friday was May 31st and 2024. And I'm Michael and I have Sunil with me. So today we're going to do a market recap video of the general market and what we're seeing in the market. Also, I just want to remind that I will be doing another short video on some of my tradings recently. That includes like ANF, CAVA, and POWL. So make sure you look for that video. Okay, so this chart right here was Friday on QQQ, which is Nasdaq 100, and we saw a big rebound here. We had this drop right here, and then we came back like pretty much in the last hour of the day. But it really accelerated in the last half hour. So we'll talk more about like what this could mean. But yeah, so it was good news for those ones who at least some bounce here. It wasn't all just selling. Okay, so I'm going to recap some of the market news this week. Some of the things that we should pay attention to. There's talks that Canada and ECB may cut rates next week. So something to pay attention to that will affect the macro. Their economies are much weaker, so that's probably why they're cutting rates. Maybe this one or maybe the month after, I'm not sure, but there's a lot of talk about that. This is truly a stock picker market. Like I think most stocks are down in terms of breadth of the market. So if you're not picking the right stocks, you probably won't have much success. Because not all stocks are moving the same direction. Things to pay attention to, especially like a lot of the index have starting to fall in, right? And so it's very normal for a technical rebound, especially after a few days off. So watch for those levels that especially any resistance levels. See how they perform around that. It might get tested more than once before. Even if it were to be successful rebound from here and market were to recover and start to go into a rally mode again, it may test those levels many times before it actually do that. Yeah, so on Friday, we just saw like an upside reversal from the morning, and it came back up. I'm not sure how much of this is related to short covering. Some analysts say it's last day of May, so there's also a lot of just tidying up their portfolio and stuff like that. The one good thing we're seeing on the S&P is we're seeing a 3 weeks tight right now, which is a very positive sign. Other things we should look at, if you're looking at stock level, like yesterday's intraday high, let's say in the morning, a lot of stocks jump in the morning, but then let's say very quickly it got shut down in the first hour, and then by the end of the day a lot of them came back up, but did they make a new high? That's a very good question, because those ones are probably your more stronger stocks. Doesn't mean a stock that didn't make new high won't continue its run. It just means that there's other stocks that are showing a lot of strength as well. So yeah, so relative strength, we're looking for that right now. So if we were to bounce from here and the rally continue, we want to look for stocks that are showing strong relative strength, and there's quite a few. So we'll go through that list later. So yeah, this week Monday was a holiday, so in the US, and Tuesday we saw the 10-year yield jump. Nasdaq hit all-time high because of Nvidia, and also it marked an all-time closing high on Tuesday. But Dow actually slumped 0.6% and also breaches 50-day moving average. And some of these stocks that were causing it, like Amgen, Merck, and Johnson & Johnson. Overall, the market did help out, relative well, even though as the 10-year yield kind of broke out a downtrend. But the Nasdaq did also rally 0.6%. It topped the 17,000 level for the first time. The breadth was weak though. So the Nasdaq declining stocks outnumber advances by 4-3. S&P also rose in higher volume, but RSP gave back 0.7%. So again, the equal weight S&P is more broader stocks, so it's actually like kind of not doing as well. On Wednesday, the Dow again finished lower, and yeah, so it's now let's see here. Yeah, so it fell again, but you know, previously it hit the 40,000 mark and it's been dropping since. Smaller issues, closing down 1.5%. So Russell was also doing badly, just like Dow. And then mid cap also off 1.3%. S&P lost 0.7%. And Nasdaq also fell that day. And the volume rose on that day, so that's a distribution day. Okay, so the price of the 10-year bond again rose in 4 or 5 sessions. It also marked, yeah, yeah. So the bonds keep falling, and then the yield jump. Okay, so now Dow, again, we're looking at this mark. This is the previous peak level. So right now, you know, we have strong 5 straight weeks up. The bullish ratio was pretty high at that time, 49%. When the bulls, yeah, so that was, yeah, 59% was 46%. And then the bull ratio reached 62% in the week of April 1, making a 3-year high. And this unusual arrival before a 3-week slide. So again, what it's trying to say is, like, you know, we got pretty high here. And then the last time we were near this high was in April 1st, and then we had a 3-week slide. And then the CNN Fear Greed Index at 47, neutral. This was also 58 previously. So this one is more neutral. So I'm not sure why there's such a big discrepancy. On Thursday, Dow's 3-day decline is now the largest drop since October 2023. And S&P lost 0.6, Nasdaq lost 1.1, Russell. So here's the funny thing, the Russell actually came back up that day with 1% rally. Volume rose on Nasdaq and New York Stock Exchange again. Therefore, there's another distribution day. So now we have four distribution days on both Nasdaq and S&P. S&P closed below 21-day moving average for the first time since May 2nd. So that's a crucial line. Nasdaq was still above it at that time. And then we have, you know, some bad news from CRM, and then now also decrease. Oh yeah, this day was the day where yeah, the software group got hit hard, 5.8% down. On Friday, which was yesterday's session, it ended higher after a late bull charge. So they had solid month gains. We'll look at that chart in a second. And Nasdaq got support at 21-day. And S&P also up 0.8%, also reclaimed its 21-day line. Advances were leading to declines by 4-to-1 ratio on the New York Stock Exchange and 2-to-1 on Nasdaq. And volume was higher on both exchanges. So that was a really good day because we have an upside reversal, we have a stronger breadth, and we have volume. So all three were there. Russell turned in 0.7% gain on Friday. You know, was up 5% for the month. So it did find support at the 50-day line, so that's a good sign. However, IBD 50 fell 1.2%. So this is kind of real. We'll look at the chart in a second. So in the morning, we have the PCE number came out for April, and it rose. The core PCE rose 2.8% year over year, and then the headline PCE rose 2.7%. Investors seem to take heart that the consumer spending rose 0.2% on the month, only 0.2% on the month, versus expectation of 0.4% lift. So again, it shows consumer spending continue to go down. So let's look at some chart here. First chart I want to show you just on the IBD newspaper, and you can see the PCE price index and core price index here. So you see the core is still on a downtrend, so 2.75%, and then on the PCE its total PC is 2.65%, which is pretty stable here. So yeah, so on the month it rose nearly 0.3%, most of March, and yeah, so 2.65. So I think it was pretty much meeting expectations, but like I said, the consumer spending was the only downside to this, and so that could be a reason why markets sold off in the morning. So okay, so let's jump to the chart. So this is daily chart for Nasdaq. You can see there's a gap here because of the holiday, and so Tuesday we were still hitting new high, 17,000 mark right there for Nasdaq, but we have a 3-day down now. So despite Friday's reversal, it touched the 21-day, which is the pink line, and then the green line is the 10-day. So we're sitting just right under it, right? Let's go to a weekly chart. It was a down week, so you know, it doesn't look too bad because it's kind of close in the middle of the range. So technically it's still kind of considered a good week because it didn't close at the bottom. And also, you know, you could argue that it never came down to the 50-day, so that's also a good sign. It just, you know, on the daily we saw it went to the 21 and bounced back to the near, like I said, near the 10-day right now. So we'll see. On the weekly chart, it doesn't show that any trend has changed. We are still on the uptrend. But this slope, I think I mentioned this before, are quite strong. Generally they go up strong and then they kind of, and you can see this pullback right here, and then it kind of go back up again, but you can see this pace are much slower after that, right? So we could have this scenario where it just kind of go up slower going forward. That would be a good scenario. You know, some may also argue that maybe we're going sideways for a little bit, so that's another scenario. Or we actually, sorry, and on the daily chart, you know, you can see we have a downtrend right now. It's pretty clear, and the slope is pretty strong too. So so that could be the negative scenario where we're starting to come down. So we go to the monthly just to see where we are on the monthly. So we have a monthly chart. It was a really good month. So you can't even tell there was any selling in the last week of May on Nasdaq. So overall, you know, we have this nice cover handle, and then this is basically this year right here. We have been on a pretty strong monthly trend, except for April, right? April we had a pullback there. So yeah, so looking at the long-term trend, the middle term, like the weekly trend, they both still look really good. So hopefully we're going to see a bounce here that's going to sustain, and the rally will continue, right? And obviously Nasdaq comprises a lot of tech stocks, so we'll look at tech stocks in a bit, but we'll see how those are performing. But yeah, so that's Nasdaq. But just you know, just to finish off with this, like let's look at the equal weight Nasdaq. So it looks very identical on the monthly chart, weekly chart. So this one, you can tell it tested the 50-day. So this is the, you know, not weighted. So, you know, the 100 stocks there on this list is going to be treated the same. And so this one looks a little bit uglier than the weighted one, because that one only showed 3-day down, but this one we are like on the 6-day downtrend now, and it's pretty steep slope too. So yeah, I would watch for this. And again, this tells a different story, because the breadth has weakened quite a bit. Yeah, so that's another problem. So this is the Nasdaq composite. Okay, so again, this is different than the equal weight, right? So this one's showing more strength. Also, the advanced decline line, you can see here, there's 2,000 stocks up on Friday and 1,300 stocks down on Friday, and so there's more stocks up than down. So at least from this week perspective, it did rebound starting Thursday and Friday. So that's a good sign, even though the index went down. So this might be maybe not as bad as people think. So maybe this is a positive sign. So again, we need to put the index in perspective, because Nasdaq is probably the best looking one. Then we come to S&P. We can see S&P now has again a downtrend here. Of course, Friday was a very big upside reversal. In fact, you know, it went all the way down here to the red line, which is the 50-day, almost went down to there. Bounced all the way back to the 10-day. So here's the where it stands. We have the 21-day around that level in the middle, and we have the 50-day at the bottom. So what's going to do here is very important going forward. Whether it can break above this downtrend, and that could signify the rally continue. If it doesn't, so I would say next week is going to be very crucial, especially the first day of June. Usually could signify, you know, the trend of the market. If it comes down like at the beginning of the day and continues to go down throughout the day, that's probably the worst you can see. We really want to see a fall through action where it just breaks above this line, especially I don't know, like some people don't like gap up Mondays just because it could reverse. But yeah, or maybe it'll be down a little bit, but it kind of pushed through by the end of the day. That would be the best scenario. So that will break the downtrend. So that's S&P. On the weekly chart, I think it's very similar. So it did, like I said, it did find support at the 10-week moving average here, and then it closed. Like this is the 3-week tight right here. It's really tight. So that's a good sign. And we jump back to this chart here. You can see the advanced decline line actually didn't even have any loss this week, right? Like this line here, it was actually neutral by the end of the week, which is not bad considering you know, it was still a negative week for S&P. So also the right here is showing also more stocks, 1,800 stocks up, 476 down on Friday. So that's very significant. So again, maybe Friday was the turn. So you know, maybe this was just a really short pullback. So that's a good sign as well. Then we have Dow. Dow is now on the 2nd week down. Yeah, so you know, it did bounce back from the bottom and close near the top, but it is still under the 10-week moving average. So I don't like how easily it gave up that red line right here. So and then it gave up. So now we're gonna come back up. Maybe that's the best scenario if it can break above here. But if it doesn't, then it's gonna continue to go down. And you can see Dow is not very far from this bottom here. And the one thing I don't like about this chart is how fast this came down. Like here, it took many sessions. It took like, I don't know, let's just say 15 sessions. Here, it only took like 10 sessions or less. So I don't like how it came down so fast. That's the negative for me. So we'll watch this downtrend line on this side and see what happened there. What's going to happen with the downtrend line. See if we can break it above it. If it breaks above this and stay above 50-day, again, it's going to test this moving average. Like these are testing levels. It's going to test it probably a couple of times before it actually go again. So watch for that. So Russell also looks okay on the weekly chart, right? You can see here you have this little really big pullback, and then it rise, and then it pull back again to this red line again, 10-week moving average, and then this week was really tight compared to other weeks. So that's also quite surprising. Look at daily chart. And you can see there was a big drop here a week ago. And then this week, it also dropped a little bit further down. But then it bounced back. So this index like bounced back Thursday and Friday. Whereas other indexes only mostly bounced back on Friday. but this is also in a downtrend. So again, we have to push through this trend line, and then if we do push through, then 2100 is not far away, and that's a huge resistance level as well. So but Russell looks pretty good in terms of like how far it is from the high here. It's much close, it's pretty close to it. So yeah. So next week we have quite a bit of news, economic news, with U.S. Purchasing Manager Index reading for manufacturers, and also order sales data on Monday, and then we have factory orders on Tuesday, and then we have Supply Management Service Index on Wednesday, and then we have the big job report, job openings report on Tuesday, and then we have ADP employment report on Wednesday, and then the employment report on May is due on Friday. So that's going to be a big one. And most numbers I see is around 180 estimate, which is roughly in line with the previous month, maybe slightly lower. And then we have employment rates hold steady at 3.9%. So this whether this employment rate will stay at this number or go down or go up, go up even more, may have a decision, will make the Fed think twice about what they're going to do going forward, which they have a meeting on June 12th, which is the week after. So yeah, so lots of macro stuff coming up. Then we have earnings from CrowdStrike, Semtech and Samsara, and we have AEYE also reporting. Let's look at the mid cap guys here. So mid cap here. So mid cap looks slightly better. You can see it bounced off the bottom and it climbs above the 10-day line. So almost seems like it broke the trend line. So this might be a good news. So this is quite positive. Let's look at, so the other one, that's the IBD 50. It didn't do as well, this one. So it didn't come back here at the top of the range. It's just stuck in the middle. So this is IBD 50 growth stocks. Look at the 10-year yield right now. So this week we saw the Tuesday right here, big bounce. Wednesday, big bounce. Thursday and Friday pull back somewhat. The thing about this chart is, it's a very bullish pattern, because we have this like kind of like this cup base pattern here. It looks a little bit more like a V, but generally that's how this index moves. It kind of like look like this. This was the big run last year. But anyhow, it has that same feeling, right? Like it goes up, comes down, could go up more, comes down. So that's the scary part if this happens, right? Like if we go back up towards 5, and right now all these key moving averages, short-term 10-day, 21, 50-day, are all converging, and they're all around 4 or 5, which is which means it's finding support at this level. And we tested this 200-day moving average here. We did test that, and it never came back to it. So that's also not good, because that means this 10-year yield could possibly run, right? Again, it's too early to tell whether this will have room to run, but if this do run, it's probably going to hurt the market, and probably Russell will be the most impacted by it, the small cap guys. So yeah, so watch out for this. Again, I don't like the direction of this. This has been pointed out by a few people on Twitter. I saw that. So watch out for this. Then we look at the dollar. US dollar. This one is pretty much flat. It's stuck in this zone right here. Tried to pop up a few times but didn't succeed. But it still didn't come down. It also tried a little bit red down here. So it's been very volatile lately. In the last 5 sessions, it's been like, yeah. So it's like, can't really tell who's gonna win there. So, then we have oil. Oil has been dropping back to this 200-day moving average. So this one has fallen 3 times now to this level. So it hasn't broken it. If it breaks it, then yeah, oil will probably go down lower. But it hasn't. So we'll see what happens this time. Although I haven't paid attention to oil and gas stocks, but I heard that some of them starting to move up, which is kind of weird because oil price going down. So very interesting. So that's USO. Okay, so the gold chart was looking pretty good until, again, you know, we have this nice cup base, but it really fall apart right here, and then tried to come back to the 10-day, the green line, and you can see it got rejected, and then it go down a little bit more, and then comes back again, it got rejected, and now we're 50-day. So the 50-day has finally caught up, and it fell all the way to 50-day. So now the big question is it going to bounce up from here, or are we going to break through this? Gold has been really strong this year, right? And so I'm not sure what's going to happen here. We'll see. And GDX, the stock side also look. This one is not at the 50-day, so the stocks are stronger than the gold bullion. Then we have copper. Copper also very strong this whole year. You can see this run, and then this was kind of like definitely look like a top now after this gap down, and then here's another gap down. So this is looking really bad now, and now we're just sitting a little bit above this 50-day. So waiting for this 10-day to catch up. This is the slope right now. So yeah, so again, don't look too good. If oil is near the bottom range, copper is near the bottom range, gold is near the bottom range. So if commodity falls off, then, you know, might be, I don't know, might be good for the market, because commodities generally, I don't know, depends how you look at it. But yeah, but anyhow, for commodities, it's not looking as good, and that's why there's not too many commodity stocks on my list either. So we talked about wicks many times now. We had these lows here, and this recent market run here in the last month create a rally, and we went even lower than here. So almost like, you know, no volatility at all. And then on this Friday, I would say, you know, that's a big swing. And again, you see how fast the volatility fell. That's a big drop. But that being said, you know, you always have to ask, like, are we too complacent now, you know, and so forth. But the good thing is, I think it got challenged here at the moving average, because this is the long-term moving average, and then the red line is the 50-day, I believe, and then also got challenged there. So it fell, both of them, the challenge here, and so that's a good thing, I would say. And so maybe it can remain low down here. That will create the rally to continue. But so we'll see what happens. So the stochastics here, I can't remember the black or blue line, but one is short term, one's long, one's 5 and one's 10 day, I believe. But anyhow, they're kind of dropping, but not a lot, right? For Nasdaq. So you can see, like, even in the past, it has dropped, you know, a little bit here, and then came back up, and then dropped a little bit more, came back up. So this is when the run's starting to get older and older. So we are more than, you know, 1 month and a little bit into this rally since this bottom. So, you know, again, we wouldn't see the same slope of the run, right? Like we'll probably get a slower run, even if we do get a rally here. So and then it could create this, right? Of course, you know, the worst case scenario would be like, you know, where it goes down like that, go down like that, like go down like that, right? That would be the worst case scenario. And we look at S&P. So S&P is slightly lower, around the 60 zone here. So this one did fall a little bit further, closer to the 10-week moving average. And look at Dow. So this one is almost near the bottom, like close to 20. So this one again, pretty low here, 38,000. So this one has, like I said, has corrected really fast. I don't like that it corrects so fast, but yeah. So we'll see. This is, I think Dow will be very critical to the market going forward, because this has, in a way, has let the market down. And then you have Russell. The Russell is not as low as Dow, but it's still near the 35 zone. And again, we have this downtrend. So we're not, you see, we are really, so the stochastic is actually worse than the index itself, because it hasn't dropped. Like right now we're here, right, at this level, and this is the middle, but this one's actually much lower. So there's more selling momentum than it appears on the index. So yeah, so maybe Russell will have a better chance of breaking out. So that's something interesting. So June 12th is the Fed meeting, 95% no rate change, 5.25%. July, 83% no change. September, 47%, just slightly more favorable to have a cut here of 0.25% to 5. And then no change in November. And December we have no change either. So right now the market only pricing in one cut for this year, which is in September. So the Atlanta Fed GDP estimate right now has dropped from 3.5% on May 24th to 2.7% now on May 31st. So yeah, so this is worth watching, because I'm surprised it dropped so much so fast right now in the last few weeks. You can see we were at 4%, above 4% early May, and now it's dropped to 2.7%. So like I said, we're entering the month of June, and we have all this PMI data, job openings, ADP report, initial jobless claims, and employment report is 178,000 median forecast. Previous was 175. Unemployment rate 3.9%. So we'll see where this is heading. If we get a worse number, like let's say jump to 4%, hitting the 4 number will probably be a big deal. Just because, you know, it shows that the trend has been slowly rising, right, for the unemployment rate, and which means the economy is slowing down. Which means the Fed cutting rate is maybe more suitable, versus like if it is still strong economy, then why would they want to cut rate, right? So and then there's hourly wages, it's rising 0.3 versus 0.2 last month. So that's another thing to watch. So the fear and greed index on CNN is neutral right now. If you go look at the timeline, we see this bounce, and it has fallen slowly, and it's fallen much faster than the indexes. So I'm not sure why, but it looks like maybe there's more fear. So this is the market momentum. It's still greedy. Stock price trend is starting to see fear. Breadth is also seeing fear. Put and call options are neutral. Market volatility is really low, neutral. Safe haven demand is greedy here, and jump on demand is neutral. So yeah, overall it's like neutral. So that's the CNN one. And then we look at the AEYE survey. It has a big drop. I don't know what happened, but like 47% to 39%. And this is for Wednesday. So it was like a lot less bullish. And then the bearish stayed the same number. Didn't really move much. So basically you have more bullish people turning neutral, which is really interesting. So that was by the middle of the week. And yeah, so that was that. I don't know, it doesn't correlate much with the index this week. Because so here we have the IBD signal. So they start putting like, you know, how many percent you should be invested. And we have our first confirmed uptrend on May 15 here. And it was near 80 to 100%. It's gone down. And you can see this week we have 2 distribution days. We had 2 last week. So we're starting to power up the distribution days again. This is usually not a good sign for the market. Especially when the distribution days, like we have 4 in like a span of like what, the last 7 sessions, right? So usually when you have so many together, that's a clear sign that someone is selling, like the institutions are, and they're getting out. So, you know, will it bounce back? It's possible, but it's usually unlikely. But so we'll see. And then we have like this distribution in stocks way more than accumulation. And on Friday we had slightly more groups bought, accumulated. On the stock side this week it was pure distribution, except for a little bit of commodity and retail stocks. So retails are definitely leading the market right now, which is kind of interesting. And we'll look at some of the stocks on my list. But you can see like techs are doing pretty bad. Industrial was doing bad and then a little bit neutral by Friday. And financial is also doing not good as well. So yeah, like they were heavy selling the first 2 days of the week. And then by the last day of the week, it was like retails was the only one that was really green and some commodities. So again, we're interesting there. So this is a report we pulled from McBoss Capital tool, where we show the accumulation and distribution in each group. So here we have retail, apparel, clothing, manufacturing, showing accumulation. A stands for accumulation, D for distribution. And I don't follow most of these stocks, but you can definitely take a look. And then we have shoes, apparel, shoes. We have ANF. So I'll be making another video on ANF on how I trade. There's Burr also reported this week. Foot Locker, Gaps. We know what happened yesterday. Gaps. We should look at that too. On and on. So all these ones I highlighted is probably on my list. Oh, except Foot Locker. I don't think that one's on my list. Then we have commodities, U.S. exploration production. So there's some accumulation here happening in these stocks here. I don't have any on my list right now. Transportation ship. So CMRE is on my list. Zim is on my list. And then there's these other guys here. So some of this not on my list is because maybe the fundamentals are not as strong. And then we have more retail. Again, more manufacturing and shoes and related. Dackers, Skechers. Oh, Burke is on my list. Okay, we have retail home furnishings. So this is home furnishings. Lazy Boy. I don't have any of this in my list, but please feel free to check it out. Retail restaurants. So CAVA is on my list. You can see there's Red Robin, Texas Roadhouse. Medical hospitals. I don't have any on my list here. UHS may be on my list. I can't remember. Medical wholesale drug supply. Again, you have MCK, PAQ. Commodities, energy, coal. So coal. Yeah. telecom service, wireless, auto truck, original, cosmetics. So yeah, let's see what else here. Medical, diversified, media diversified, sorry, Fox, oil and gas field services, computer hardware, peripheral. So lot. This wasn't on my list, now it is on my list now. So take a look at that. Logitech, internet network solutions, and telecom service. So yeah, so those are the top ones that are being accumulated this week. So we're gonna go over the sectors, spider sectors. So the first one is technology. You can see last week was still doing pretty good, and then this week it just fell apart. Now we're at 50-day. It bounced a little bit off it, so but it still looked like a pretty steep downtrend. So yeah, it definitely doesn't look good. Communications sector is the next one. This one looks pretty good because it actually hit a new high on Friday. So yeah, so that's very interesting. Yeah. XRT retail. Look at the retail. This is really powerful right now. And yeah, so it actually went up quite a bit on Friday, and you know, we'll look at the stock, but gap was definitely a contributor to it. But you know, this chart, it looks kind of ugly to me because it have this cup and then this really deep, not quite a handle because the handle shouldn't be this deep. But anyhow, now it's like rebounding from it. So the selling is kind of, look at this selling. There's no more selling here, and look at this selling, it's so low, the volume. And then all the blue are higher volume. So I don't know. It's possible retail will take the leadership. I don't know. Let's look. There's definitely lots of retail stocks on my list now. So that's retail. This one is consumer discretionary. So it did rebound on Friday, but prior to that, it was pulling back, and then you can see it kind of, again, the volume like kind of died down right here. So it doesn't want to make a newer low. Like it might have make a newer low on Friday, I don't know, but it looked very close. But anyhow, it bounced back pretty strong. So this looks pretty good from a bounce back perspective. However, we're still on a downtrend. So if we can break this downtrend, go above it, that would be really positive. Yeah, and this is a pretty long base too, like based on base pattern. So you can see the consumer discretionary definitely been hit hard for sure. So yeah. Staples also, wow, look at the staples. It's a pretty big bounce as well. So this is, again, you can see the volume on Friday is higher than all of them. It broke the downtrend. It break above it. So this is very positive. This is the smaller cup with handle here. Bounce out. Here's the bigger base right here. So it's looking good. It's looking good. I think this chart looks okay. Staples, right? But yeah, I don't know which stocks are in the staples. But it looks okay, like on the long-term chart. So yeah, so this is a good sign for retail. Both discretionary and staples are doing pretty good. Industrial. So industrial is 3 weeks down. It broke below the 10-week moving average, and now you see it's trying to come back up. So this one looks okay. We'll see if it can come back above it. That will be important. Materials. This one also broke the downtrend somewhat. So this is a good sign. This one looks more like a cup with handle. Yeah. The volume is not as high on Wednesday. We'll see how that goes. But it has also dwindled. The volume has also come down quite a bit. Utilities. Wow, look at utilities. Everyone talking about utilities now because of AI stuff. Power, power, power. They need more powerful AI stuff. So yeah, this is a nice pullback. Look at how much it went up and how much it gave back. That's incredible. And a lot of analysts like utilities right now. So, you know, utilities could be a powerhouse, you know, not because of the, you know, this. So the traditional utilities they talk about is like, oh, hey, you know, they just borrow money to you know, create power plants or whatever, right? And so a lot of their operations depend on lower interest rate. And so the fact that it can, you know, bounce this much, this is probably the steepest bounce you've ever seen, man, for a long time. And then the other story is, so we might be going into a lower rate environment, so this is good for utilities. And then the other story is obviously AI. We need power all these different computers and chips and servers and stuff. And so this is becoming a powerhouse. Like this is if you didn't tell me this is utilities, this looks a very powerful chart. And yeah, I'm surprised I'm really shocked how strong this is. So pay attention to stocks in this area. Yeah. Okay. So the healthcare is also bouncing from the bottom here. Again, we're still on the downtrend. This is a steeper. Again, like we're seeing a lot of this pattern, right? Cup with handle pattern. Except this handle, for most of them, are very deep. And then we see this bounce here. So it's looking okay, the healthcare, but you know, but it's not like outperforming or anything. Energy. So energy, you know, we had this huge cup base, broke out, didn't really go that far, and then it just kind of make newer lows all the time, right? Look at that. And then you have this downtrend. So I don't like energy as much right now, but like I said, they did a lot of energy stocks bounce on Friday. And then we have finally financial fell on this breakout, pull back, and now it's coming out again. So perhaps this will work this time, I don't know, but it looks good right now. And then you have real estate. Real estate also, see this really ugly base here. And but right now, again, we're trying. So a lot of them right now, like all the sectors we're looking at, either they're trying to come breaking out of their handle, break down that downtrend line, and so this one did come out a little bit. Again, that's an early entry point. The safer entry point would be like actually the high of this handle, or like you see a really huge volume, right? So this is definitely higher volume than the last many sessions, so that could be an entry point. But if you want to be safer, then it'll be this level here, and then this one has another entry point too, right here. This is probably the final one, $40 this way. But this is real estate. But like, I'm just talking from a chart perspective. So because a lot of them have that similar pattern, like a cup with handle pattern here. So a couple of sectors that Jim Roppel pointed out, it's kind of scary. Transport. The transport group has been on a downtrend, and you can see this downtrend. It did rebound this week, but again, this downtrend is quite severe. And you can see the 50-day line is coming down, starting to come down sharply. The 21-day, the 10-day, like all these are pointing towards a downslope. And then obviously you have the 200-day. This is the last defense line right here, and you can see it's fighting hard to stay above it. But this thing is starting to curve down now. So basically what he pointed out that this could be a troublesome, because transport technically usually signify, you know, a recession coming if this continues on, because usually a group like this don't sell hard unless there's a recession or something like that. So something to watch out for. And the stock in this group has been decimated. ODFL, this is huge downtrend right now. SAIA, same thing. So this is like, you know, like this were all uptrend recently, and then in the last month and a little bit has been really broken down hard. And this is an L-shaped pattern, so that's a very bearish pattern. So yeah, not very good. And then the other group that is also not doing well and is also fallen is home builders. Now it still not look as bad on the index here on the ETF. So here you go, a nice cup, but this handle is starting to look, you know, pretty deep. It can work, but it's just right now still not. It's still under the middle range. It's still under the, you know, slightly near the 10-week 21-day there. But yeah, but some of the stocks are looking worse. Like let's look at Toll Brothers. Yeah, so this one, okay, this one doesn't look as bad yet. This one, so you can see here, it's having trouble, right, on the 10-day, coming back up above it, and it just keeps staying down below the 10-week moving average. So that's just a bad sign. PHM, this one is not too bad. It actually came out on Friday, so this is a really high volume, so this could work, this one. So yeah, so this one is probably a weaker chart. It doesn't look like the other ones just now, but yeah, so it's yeah, on the downtrend as well. So anyhow, the builders definitely has weakened quite a bit. And let's look at the tech group now, SMH. So it's a semiconductor group, very similar to the Nasdaq chart. It broke out, make new high, and then pull back to the 21-day, close at the 10-day. Very similar to Nasdaq, very similar. So that is the semiconductor group. Like, everyone loves this pattern. I don't think anyone doesn't like this pattern. Go look at weekly chart. So, you know, this happened before, right? So here, this was last year, consolidation. What did it do when it tried to break out? It kind of came out a little bit and then went sideways for like a few weeks. So we could go into that again. I don't know. So it could go sideways here for a few weeks, right? And then it finally take off right here. So it's possible, you know, that we could go sideways a few weeks and then take off. We'll see what's going to happen. Let's look at the individual stocks. So Nvidia, everyone's favorite, and this has come out pretty strong so far on this base. And then the previous base was here, and you know, you can see it was a strong uptrend there. Right now, yeah, so this is the base right here. Came out pretty strong on the earnings and stuff, and it has pulled back. So one thing I noticed, and again, it's not like a really negative, but it is a negative to me, is that it couldn't close on, not two things, right? It couldn't close at the top, and it closed negative, and this is on higher volume. So we go look at intraday, right? So this is Thursday right here. This is the high on Thursday, right? And then this is the high. So it didn't come back to near this level, and it also didn't close above the previous day close. In fact, you can see exactly where the sell-off is. Someone is trying to sell at this level. So that is a negative to me. And the funny thing is, I'm seeing this pattern in a lot of the chip stocks. Now, it might mean nothing, but I don't like seeing that. So the downtrend line, you know, can be connected by at least 2 days on a downtrend, and we are seeing that right now. So this is the downtrend slope. So we'll see what's going to happen. It's only 2 days, but even 3-4 days, it doesn't mean anything. But at least that's something to be aware of. If we continue this downtrend, you know, then obviously it's not a good thing. So that's that one. If we look at, let's say, MD, So AMD looks slightly better. It closed near the previous day's close, actually a little bit higher. But let's go to the intraday. So this is what earlier at the show, beginning of this show, I said, you know, watch, because what happened on Friday was we have a strong open, and then it went down really hard, and then we came back, but this didn't make a new high, right, compared to this high here. So basically, you know, if we were to go into the downtrend, this would be considered the top right here. So, so basically I would say, hey, yeah, Friday's bounce is good, but I want to see it go above this high, right? So at the minimum. So that's what I want to see. So again, we need to see it go above this high right here for it to be meaningful. Because really, again, AMD, you can see it already formed a downtrend as well. On two, top two higher highs here. So it is kind of downtrend now. So that's another one. Let's look at ARM. So again, I know this is like very needy, picky stuff, but because on the daily chart, again, this is like the downtrend line. It's not very steep or anything. It could be just going sideways, right? So even on here, you can just say it's going sideways. It's okay, right? But again, for me, because the sell was so significant here, that I want to see it comes back to this high, right? Because this was where all the selling began. So all the people who sold, why did they sell here, right? And this is superb volume, and so I want, even though it came above this right here, it doesn't mean much to me. It has to go at least above this level. Better yet, probably this level, like making new high. But I think I'll be more comfortable at least at this level. So anyhow, I'm seeing the same pattern on all these cheap stocks, which is kind of weird. Okay. Qualcomm, another one. See high here. This one similar to Nvidia. Could not close above previous day's high. Low. I mean the low. So again, I don't know what's happening there. Very similar to Nvidia. Taiwan Semiconductor. No, sorry, wrong. TSM. Same thing. This one even looks worse because it didn't even try to make a new high in the morning. Again, this is the lower previous day. It couldn't even come close to it. Again, all this, like when you look at the daily chart, it doesn't look like anything. It looks like it's a normal pullback. This chart looks pretty good. Nice uptrend, pullback. Looks like it's ready to go again, right? But like I said, the detail matters to me. And of course, all this will be null if next week it just bounce hard. But I'm not sure if that will happen. So that's, yeah, some of the chip stocks here that I feel very similar pattern, but it's a negative on Friday to me still. So I think this is probably the underscores the highlight of the week for me, is how bad the software group is. And this break here is significant. It pretty much make a new low out of this base. And
with volume.
Yeah, with huge volume. And also undercut this one as well. Of course, Friday we have a rebound. But it doesn't mean much because we are in a really steep downtrend. So yeah, it will be tested here somewhere around this level. So unless it can go above it without any hesitation, then that's a good sign. But otherwise, this downtrend is, like I said, very significant. And one has to wonder, right? Like why, Salesforce, getting hit so hard. When stocks miss, it's fine. Like they're gonna go down, but why is it going down this hard? You gotta ask yourself that question. This is, it did have a big bounce back on Friday though. That's the only good thing. But but you have to understand this has down quite a bit. It did undercut a lot of previous, maybe not. So it didn't undercut this one yet. So, but you know, definitely undercut the base here. So yeah, we'll see what's going to happen, how it's going to trade here as this line comes down. It's going to hit it and see whether it can climb above this downtrend line. If not, then you know it could go lower. So that's Salesforce. I think Workday also went down. Yeah, also went down here. So they all kind of follow each other, right? This one, the bounce is even weaker. So this is not good. And then we have ServiceNow. Also got hammered. Again, all hit new lows in the recent base. So this is all, this chart is basically damaged, right? And it's going to take time to consolidate and, you know, heal itself before it will work again, I think. So, and again, humongous volume, lots of selling. So that's the problem. Okay, let's jump back to some of the big, I mean, there's lots of other ones that just fall this week. I mean, there's lots. But let's look at some of the bigger guys. Let's go to Microsoft. So you can see, again, we had this. So that's the only good side. The good thing so far is like all this, a lot of this, like, you know, ones that are still standing have come up, you know, have this base build, and they're already consolidated. And now, if in this case it failed to break out, and it fall back, and that's fine. It happens a lot. You know, try to break out and then come back. But this is, like I said, I see a lot of the handles are really steep, right? This is another example of that. Usually, you want to see handles come back to around the mid-range, but this is like beyond the mid-range. And so, yeah, so that's really bad. The other thing is, you know, it went below the 50-day line as well. That's usually, I mean, the 50-day line is kind of in the middle range, so that's, I guess that's okay. But yeah, it's just, you know, we'll see. It has to bounce back now, right? Like time is essence here, because everyone's seeing the same thing. If it doesn't bounce back, people will sell. They're like, oh, if next week, like by mid next week, if it's still at the bottom here, people are gonna lose confidence. They need to come back right away. So at least the ones who hasn't sold, right? So that's how most people think. And if it doesn't bounce back, they're gonna give up on this. And who knows what that could happen, right? What that could mean. It could mean it just keep going sideways, or it could mean it going down, or maybe when people get shaken out, you know, come back to this low and then it bounce finally. I don't know. Many things could happen, but the key is like it's got to bounce right now, you know, for any more confidence. So Microsoft, that's Microsoft. I'm gonna jump to Apple just because Apple has a conference up in June 10th, and this is one of the better chart. You can see there's so many blues, a sea of blues, and only a few red days here, and even those red days have no volume. So really good chart right now, very strong. And you know, I'm gonna guess by June 10th it's gonna come to 200 easily, and then depending on how the conference go, it might break out. If they come up with really good products, I don't know, but that's kind of the sense of it. But the chart is really strong right now. I don't have Apple on my list just because it has lower earnings. Like you can see, it's down to 1% now. But anyhow, it's, you know, some people like it. So that's Apple. Let's go back to the other guys. Amazon. So Amazon, you see, slowly, like this was really tight last week. I was saying how tight this is a good sign, but you know, it gave up. Look at this, and Friday it didn't bounce back, also negative. Google, and that's another thing that could happen. Like we haven't seen many stock chart did that yet, but what I'm trying to say is like this could happen in the next week or so. If the market doesn't bounce back, like stocks not bouncing back, people are going to start giving up hope on these stocks. and they're gonna sell before it goes down even further, and that's when the panic really start to set in, and that's when volatility usually happens. Is when everyone start to give up. It's like, oh, they keep going down, I gotta sell now, Everyone's starting to panic, and that's how the wicks goes up really fast. But we haven't seen that yet, so yeah, be mindful of that. All right, so Google obviously is on a nice uptrend. We are starting to see a downtrend now forming, right? Again, time is of essence here. You can see about close to like 2 weeks now. It's just not moving back up, but it's not moving down fast. Again, this might be the same story like Amazon. It's starting to give up here slowly. It's starting to give up here. It's starting to give up here. So as time goes on, the more time it goes, and the stock doesn't go back up, people are going to start giving up on it and start taking profit, right? If those have profit. So this is another example of that. So let's see. Let's Google Meta. So this one, I don't like this chart. It hasn't bounced back strong. That's one thing. Second thing is, like, it went sideways for so long, it couldn't come back above this red line. Again, you're starting to see like lower lows now. You see that? So people are starting to give up on this, right? So that's the problem. Even though stocks doesn't always have to go up, but after time is essence. If after 2 weeks it couldn't go up, people are going to start giving up on it. And sometimes it could be a temporary thing. It could be like, undercut this and everyone gets shaken out and then and then comes back, right? But in this case, I don't see a big bounce back yet. So yeah, very important to see that big bounce back. The last big cap stock is Tesla. Wow, I'm amazed how long this has going sideways. This is quite interesting. Volume is really low as well, which is a good thing. So going sideways is not necessarily bad, but if it stays too long sideways sometimes, and we saw that, kind of here is a little bit different because it did actually move up eventually, but it didn't really have much power, and then we had this big downfall. So we went up here really strong, and again, this is a very bad, to me this is really bad. Like, normally when the stock go up, breaking the moving average like this one, the red line here, and like look at this volume. This should be very powerful, but instead it not only it can't come down, but it never bounced back, and it just went sideways. Like, I don't like that. But it hasn't gone down either, so you could argue, hey, it hasn't gone down. But I just don't like how the movement works. Like, normally it shouldn't do this. This is not normal. All right. Which means it's a gamble, right? Like, I think it's just waiting for some news, like either good or bad news, to make a decision which way it'll go. So that's to me like more of a gamble than anything. So that's that. So we're gonna dive into my stock list right now. So this week's list is slightly different. Most of my positions are cash out right now, and we'll talk more about that in my next video. Make sure you follow that video. We'll talk about some of the trades I made into details, like CAVA and ANF and POWL. Those few stocks I'm gonna mention for sure. But anyhow, the reason why I shift my list a little bit is because some of those leaders have fallen, and some of them are fallen hard, and some of them a little bit. Anyhow, so because of Friday's bounce, I want to look for new leadership, right? And it was an upside reversal, and I want to see if any of those stocks are doing well, and who are they? And some of the older guys that I have on my previous list, which was from April 9, that list, like they said, because of, like, some of the leaders have fallen a little bit, I feel like I'm still keeping track of that, but I want to see if there's any newcomers, right? And so the ones that are highlighted darker color are from my previous list, which is still on this list, and then the ones that are kind of not highlighted, ANF is still on my previous list. I just didn't highlight it because it's not on the uptrend right now, really. We can talk more about that as well in my next video. But really, yeah, I'm gonna go over this list really quick just to show you. So this is from May 26th. So I'm gonna jump to. Let's look at GPS just because that one is moving recently, right? So on Friday we have a huge gap up on volume because of earnings, and so what I did was like, hey, go find me all the stocks that has gone up this week, and rank them, and calculate from the bottom, right? So wherever the bottom is, calculate the percentage gain. That will give me the list of all the stocks that are running this week, and that's what I'm seeing here. So INSM obviously came up with some cancer drug news, trial news, and then it went up like double, I think, on that news. So that's why, yeah, right here. So so this is on a super uptrend right now. Again, to each is his own. Like, it's definitely how you trade is up to you. But this is a leader right now because of that news, and so is number one here, 150% gain in just basically in a week. And we have GPS, which is the second. So that's gaps. So this is retail, again, in the apparel shoes, and again this few days here has gained 40%, over 40%, and still in the base. So again, you can figure out how you want to trade this if you like it. Chewy, again, another retail stock. So we're gonna see a lot of retail stocks. So Chewy, you can see it bounced on earnings news, and it came out and it went up 2 days, and then on yesterday, even though it didn't go up, it didn't give up much either. So that's also good news. DKS, retail, Burlington also report. So most of these stocks report this week. Birkenstock. So again, a lot of these are all in the retail, right? So Birkenstocks also report this week. And this is an IPO that hasn't really done much, but this is the this is finally, like, it fell right here last time. So but this time it followed through on the earnings, so that's good news. And yeah, and and this, like I said, the retail is hot right now, so maybe it will keep running. I don't know, we'll see. Again, I don't know if this is new leadership, but this week, like this you can see all these names here are really powerful. Again, I'll talk about ANF in my next video, so please follow that. And then we have gas from commodities, HIMS from technology. So HIMS has a story about, like, they're gonna do obesity drug as well. And this one, you can see it. Let me take out my hookups just because it's easier to read for now. And yeah, you can see the base here fall back pretty hard, and then it bounced back also strong, make a new high, and pull back a little bit on Friday. So this one is also looking pretty good. You can see the blue volume are not bad. Arlo in the security group, SRPT in the biotech, BMA in the banks, foreign financial. Some of this is in the downtrend. So the downtrend one, because I'm only doing such a short time period, like 1 week. So for example, let's look at ESTC, right? Because this was reported as well this week, but they've been on a downtrend. So you can see this is the downtrend, and it come back up a little bit, but then now it went into a downtrend. So it's still on a downtrend because it hasn't really broken out of this yet. You can see it just, intraday came back to that level. So yeah, so even though it was a big bounce on Friday, like 11%, you can see that 11% here. So it's still on a downtrend, right? So it doesn't mean much. LTH in the retail, which is leisure services, Levi in clothing, UHS in hospitals, GDRX in medical, FLNC in energy alternative, SLG in REITs, RL in clothing. Again, Salesforce is in a downtrend, so I wouldn't count that. BLT in biotech, and then there's a couple, even Duolingo. Let's look at. I haven't looked at it in a long time. So that one's in a downtrend. So again, sometimes in a downtrend they have a biggest bounce. So so beware. Like this is a good one because I don't like L-shaped pattern, right? So this is L-shaped pattern, and it's because it's sitting under the moving average as well. So I don't like that. So yeah, it's still on a downtrend. So even though it has bounced back quite a bit here from the lows in the last week, but I wouldn't consider it out of the woods yet. Give it more time. So Zim is still running strong. I think it gave back a little bit on Friday. So I talked about this in my last week's video. Yeah, you see it make new high, but it did close at the bottom, but it's still really strong. It hasn't, yeah, still lots of volume too. So so some of this is a downtrend. Alcoa, very interesting. Alcoa is on this list. DVA, outpatient home care. Steven, this one is new. Like this one came out on this list. I don't know if they report or not. Let me see. Yeah, so this one is ready to come out. It actually came out a little bit, so that's kind of good news. And this chart looks really nice. Like I love the chart. Look really nice, pattern here. Look at the selling volume is gone. Look at the 2 days of higher volume. This is a really good chart right now. This group is starting to get traction, I think. Oh yeah, because there's another one, right? Like the First Solar group also going crazy. So here's First Solar. It has given back a little bit, but you have to understand this went up a lot, right? So giving back this little is not a lot, right? So this is very strong chart pattern. So that's First Solar. I think it's somewhere on this list. Let me find it. I just want to know what number. Okay, I know why it's at the bottom. So the reason why it's at the bottom is just because like this week it's been negative. So if it's in negative, it's not going to show up on the top. So that's why, yeah. But it's still a strong chart. So let me go back up here. So these are the ones that are doing well this week. CMRE. This is in transportation. So this is the same as Zim. Look at this one. It's like really nice. Look at how many blue days there are. I think this is the most blue days I've seen, like in an uptrend. It's a small cap, but it's like amazingly holding so well. Ascend in biotech, Deckers again in shoes, a nip in drugs, Viking. This is a newer name. A report this week, another IPO. Look at this run here. This is the slope right now on the 10-day. It doesn't even have a 21-day line yet because it doesn't have enough data. But yeah, this is a nice little consolidation here. And then look at this consolidation, like few days. It's definitely more volatile. You can see the range are bigger, but overall the trend is up. And yeah, this is the IPO weekly chart. Looks really strong. Like this next quarter is 44 cent jumping to 64 cent. So this number doesn't calculate properly. I don't know why sometimes. But anyhow, 44 to 64 cent. It's not bad. So we'll see if it works out. Then yeah, then we might have room to run. But actually reported. Yeah. So So it reported last quarter, but next quarter it's that one, 44 to 64 cents. So it's gonna improve, right? But anyhow, that's leisure services. On, let's take a look at this. I haven't traded this stock at all. So recently, like in this year, I haven't traded it. But it's very strong uptrend. Look at this. Again, lots of blue days. And look at this, how tight this is like trading right now. Whenever you see red days and they're trading close to that previous price that was blue, it just tells you that people don't want to sell. And look at this volume going down. This is perfect chart. So on again in the very strong retail. Look at how many yellows here. All retails in the top 50. GM. I'm surprised GM's on this list, but it's here. INDV, Health, Elance, Health. All the reporting this week. Retail, ARM, we already talked about. Logic. Yeah, let's look at Logitech, because I didn't think this would be at the top too. So here it's trying to break out right now. Look at how tight this stock is trading. I mean, it has always traded tight, but I just like how, like, again, many blues. See how many blues? See all these blues here? And look at the red volume. Really low. And then we have DTE into utility diversify. Again, for the utility stocks, like, I don't know which ones are the best, but I know, like, some of the ones. The problem with utility for me is a lot of them are not good earnings, like, or very low earnings. But again, if you want to trade on the AI theme, maybe you would want to make exception to this now, because this is like pretty nice chart pattern. Look at this. I mean, Friday didn't do well, but in general, it's been running. Energy. Another one is VST. Again, electric power. Look at this. This is what people are talking about, how strong of a performance they are. Again, Friday give back quite a bit, but it's still holding on to that 10-day. So really strong, this group. Again, I don't know which stock is pure. I think the POWL group might have more, just in general. Yeah. CAVA we're going to talk about in the next video. ML, pretty good. PPMC, MNTK, those are some of the ones from my previous list. BLBT still here. So yeah, all these are still doing pretty good. Yeah, feel free to look at this and look into it more. I usually only focus on the top 50. It's just too many stocks. Okay, thank you. We'll see you in the next video. If you like it, please subscribe and like this video. Thank you. All right.